Yo, what's going on, premium chasers? Welcome back to another episode. Sorry about all the shadows and stuff. I have like a makeshift situation happening right here in the office. It's like 11 o'clock at night when I do my research for the week. It's literally a Saturday night. This is what we do here, okay? So today's video is gonna be really one of the most important fundamental lessons I can give you on selling options, specifically when to sell calls, when to sell puts. And I think if you take this with you in your trading journey, like, it's going to help you make good decisions for yourself, not just like finding some guru who tells you some trading signals, right? Like this, I believe, is going to help you tremendously. All right. So before we jump in, I just want to welcome those of you tuning in for the first time. Also, we do a giveaway on this channel. You get a free one-on-one option strategy call with me. All you got to do to enter in to win is drop a comment down below. And also, guys, I did just open up our free community. Everything is free, right? I'll leave it down below in the description. That's where all the resources on the channel are kept. That's where we can vibe out. You can ask your questions, all that good stuff. So I'll leave a link for that free group there. And that's like more up-to-date stuff that's happening because these videos obviously are like a few days delayed, right? So let's go into our whiteboard right here. So when selling calls, selling puts, the thing is, it can get overwhelming when you're a beginner. And that's why I wanted to start this channel. One of my biggest regrets, and I hate having regrets in life, but one of the biggest regrets I have is that I didn't start doing this sooner. And I truly mean that. I truly wish I got into selling options sooner. I've been doing it now for like 7 years, but I still like wish somebody would have taught me this stuff like when I was like 18 years old, or like, you know, or even when I was just getting started with investing, like even earlier, because like I'm going to teach my kids this stuff, right? So this whole strategy about selling options, the wheel is very entwined with it, okay? It's called the wheel strategy. I've done videos on it. You probably understand it at a high level, but here's why it works, and here's kind of the logic tree that you want to follow when you're doing it, right? So the first thing that you want to do in a wheel, right, is you want to sell a put, right? Selling a put means that you are going out there and deciding the price that you want to purchase 100 shares of a stock, right? So you're opening up one options contract. That's when you sell one options contract on a put, sell one options contract, you, right, are saying, I'm willing to buy, right, 100 shares of a company on X date, right? That's your expiration date, right? Now, when that expiration date rolls around, a few things can happen, right? Number one, like that your put, right? You might have to actually purchase those 100 shares of stock, right? Most likely, if you follow what I teach on this channel, your option will expire worthless, and we chasing that premium, baby, on to the next premium, right? So here's like the logic structure, okay? We'll just draw this. Sorry, I'm kind of like holding this on my lap, so I'm sorry if the writing is absolutely atrocious. I'll make this a little bit bigger here. So the next question, right? We sold a put, right? Did we get assigned, right? That means, did we get assigned? Like it is what it means. Yes or no, right? No? Yes. All right, we're going to make this easy, guys. I want to do this channel is all about ease of use, right? So if you sold your put, you got to the expiration date, were you assigned? No or yes? No? Okay, what do you think we do? We go back and sell another put and we collect more premium. Right? We premium chase it. All right. So we get more premium right there. And then you just rinse and repeat. You open up another put on another company. Were you assigned? No. Okay. Go back and sell another put. Were you assigned? No. Okay. Let's go back and sell another put. And you just you premium chasing, right? That's you're just premium chasing. Eventually, right? As long as you're going after those solid deltas, right? Like, you know, guys, it depends on what what your financial risks are and stuff. Like, I know guys that on X I talk with that have like a 0.10 delta that they're running and they're just premium chasing like that. But you're missing out on a lot of gains, in my opinion, that way. But whatever. Eventually, if you're going for those 20, 30, 40 deltas, eventually you will get assigned. That means you will have to purchase 100 shares, right? So let's say we sold a put, we got assigned. So that means yes, right? Yes, we now have the share. So what's our next step, right? Sell, call. You now have 100 shares of XYZ company, right? Our next job is to sell a call, sell a covered call. It means the same exact thing, right? Now, when we sell that covered call, you will now generate more premium, right? That premium, right? We premium chasing, right? You're going to collect premium. Now, right, you also get to choose your expiration date, right? So let's draw another nice little graphic here. and click assign and write assigned question mark. So you're selling the call. You got your 100 shares of XYZ company. You said, hey, 30 days from now, I'm totally willing to part ways with my shares. And 30 days rolls around. Were you assigned? Yes or no? Let's write our yes or our no. 30 days rolls around, right? No, you did not get assigned, right? That means your shares, you still keep them. You keep your premium and your shares, your collateral. You can run now the covered call again and collect more premium chase. So no, they weren't. And you sell another call, you collect more premium 30 days later, 45 days or whatever your expiration date is. Were you assigned? No. Okay, perfect. And we just keep doing that little circle, right? Eventually though, you will be assigned, right? Hopefully, unless you're, again, going for these extremely low deltas, which in my opinion aren't even worth doing, right? But eventually you will sell your shares. Okay. Yes, assigned? Yes, I was. Now we sell a put. And that's the wheel in a nutshell, okay? Now, these things can get a lot more complex. But what I like about this strategy, and I'm just going to use a different color here to make you understand it. There's many wheels happening within the wheel. Because, like, for example, right? This whole strategy I just showed you, this is called the wheel strategy. Like, that's what that is. But there's a wheel happening right here, right? And then there's a wheel happening right here. Okay, so you're essentially, you have two wheels happening, right? And this, as a beginner, can get a little complicated when you are managing a lot of them, right? So for most of you that, you're running a portfolio that's like 10 grand, even like 50 grand. I mean, even at 100 grand, like portfolios, like it's easy. But when you start going into like a 7-figure portfolio, multi-7-figure portfolio, it can get complicated. And that's where I struggled a lot. When I was managing my 7-figure portfolio and a couple 6-figure portfolios with this strategy, it got complicated at this point. And that's where, like, future videos, I'll talk about like the strategies for scaling, but it does get more complicated because, and let's just talk about it. So the best way that I have found when you're scaling the wheel strategy, and I don't want this to turn into a scaling because I knew this is like supposed to be a beginner video, but it's late at night and I'm going to go on my tangent and that's what's going to happen. Okay. So I hope you enjoy it. If you do, hit the like button, subscribe button. We're a new channel here. And if you like premium chasing, right, you like selling options, you like collecting premiums, and you like rinsing and repeating it like we talk about every single day on this channel, you are in the right place. Hit the like button, the subscribe button, and join our group. Join in the conversations. Mastermind on this stuff is so fun. I literally love this stuff. So let's talk about it. Okay. Even when you have a $100,000 portfolio or a $50,000 portfolio, I see this big mistake people doing with the wheel is they start doing it with multiple stocks. They'll have like 20, 30 stocks. So I've helped a lot of friends and family members with this strategy. And again, I wish I started this channel sooner, but I'm so glad I can finally do it now. Because they start spreading the risk so much across all of these different stocks. And when you do that, the management of the wheel becomes kind of too tedious. And because then you'll start being like, oh, I log in and then, okay, this one I collected about 70% of my premiums. I close this one out, and then you put it on your spreadsheet, and the next thing you know, like 2 hours of your life is gone. Right. And the purpose of the wheel, guys, like, and again, the strategy I like to share is it's not supposed to be a job for you. You're not staring at charts all day. Now, it does help. I'm not going to lie to you. Like when I research companies and I do some more advanced strategies, it does help to do those sorts of things. Absolutely. Right. But for most of you that I create this content for, you don't want to go and create a second job for yourself managing your portfolio. Right. Like it's unnecessary. Right. So what I like to do is I like to focus in on like 5 to 10 companies that I run this strategy on. Now, they're not always going to have wheels running on them, right? But I might have like 2 at a time running. And the reason I do it this way is because I like to open up multiple contracts on each, right? So a lot of you that when you're getting started, you'll be like, okay, you know what? Because I want to spread my risk, I'll open, I'll open one contract here, I'll open one contract here, one contract here, one here, right? When instead, right? Like what I like to do, is I'll be like, you know what? I'll open 30 contracts here. I'll open 50, right? There was a time where I literally opened like well over, I think it was like 100 contracts on one company, right? Again, it wasn't like a massive company, but still, right? That's like 6 figures just in one contract, right? But again, if you're doing this on companies that you like and you enjoy, right? If you get assigned, you're cool with it, right? So my recommendation is if you're a beginner, do this for sure. Like your 5 companies, just buy one contract, do it for a few months, right? Get the hang of it, but then there's always going to be 1 or 2 of these that you can really get the most kind of squeeze of premium from, right? That's giving you the best deal. Not all companies are going to be worth it, right? Again, when we do our technical analysis, what we talk about on this channel, right? And I don't want to go into too much of a technical analysis here because I'm literally on an iPad right now and I can't really show it to you guys. But every day you wake up and you look at like what setups you can do, they're not always all going to be good. And I get it when you sometimes are like, you know what? Okay, this one might not be towards the bottom of the Bollinger Band. It's like at the middle of the Bollinger Band, but whatever. Like I'm just going to open it. I'm going to sell this call anyway on it. And then I'm going to just collect my premium for the day and call it a day. Dude, I did that before too. Like, and that's fine. But then you know how many times the next day or 2-3 days later, the stock like shoots up, right? And then the premiums were like towards the top of the Bollinger Band, and I missed out on so much extra premium, right? This game requires patience, right? This is why I stress so much, right? Is sticking to your plan. What is your plan? My recommendation on this channel has always been, right? Step number 1, go to your watch list. Right? What stocks are going up today and down today, right? On your watch list, right? Your 15, 20, however many you have in there, right? What stocks are going up or down today? Okay. Once you isolate a few like big movers, right? I like to call them, you move into your next. I'm going to change this from red back to our white here because I think, right? So first thing, right? I'm just going to write watch list, right? Find biggest losers, biggest gainers of the day. Sometimes you're not going to find shit. And you're like, all right, I'm not trading today. That's awesome. Most days you're not going to be trading. That's the best part. If you're over trading, you're setting yourself up for failure. All right. So the worst thing you could possibly do is overtrade, especially overtrading the wheel. You do not want to do it. All right. Be patient. All right. So if you go in your watches and you're like, okay, I isolated this one stock, right? It's either going really up or really down. And then you move into your charting tools, right? We go into charting. I recommend you just go use like Yahoo Finance or something like that. It's really easy. Put your Bollinger Bands on. Put your Bollinger Bands on the chart and your RSI. Put your Bollinger Bands on there, okay? Right? We're going to draw like a cool little squiggly lines for our Bollinger Bands. This is the middle. This is the top. This is the bottom of the Bollinger Band, right? Where's your stock trading up at, right? Is your stock right around here, right? That's a potential opportunity to sell calls. Is your stock trading towards the bottom of the Bollinger Band? Right? Sell puts. That's what you want. If you're right around here, don't do anything. Be patient. Be patient. Okay, you don't know. Maybe at the last hour of the market open, which is usually when, again, the first hour and last hour there's the most volatility. You might be towards one of these tops or bottoms, and then just quickly open up or sell your calls or puts. That's what I recommend. Like I can't stress it enough. Your premiums will be higher, right? Your premiums will just be higher. Again, we are premium chasing here, right? And we want to get into these companies at prices we want and sell them at prices we want, right? It's win-wins. All right. Your RSI as well, right? What's RSI looking at, right? We're just going to write our 50. Are you below 50 or above 50, right? If you're above 50, you're probably towards the top of the Bollinger Band. If you're at the bottom, you're probably towards the bottom of the Bollinger Band. The RSI basically tells you how overbought or oversold a company is. Work it with your Bollinger Bands and your RSI. Works beautifully together, okay? Next thing you want to do is then go to your Greeks. Your Greeks, right? For most of you, your delta is all you need to look at, right? For most of this strategy of the wheel, look at your delta, right? I like to go at a 20 to 0.40. Right, so somewhere in that range, depending on the stock, depending how aggressive it depends, but it's usually going to be between 0.20 and 0.40. If it's at a 40, that basically means at that expiration date that you choose, that's going to be it's a 40% chance that that actually happens. If it's a 20, that means it's a 20% chance that it actually happens. But on the flip side, right, it's an 80% chance that it doesn't happen, and a 60% chance that it doesn't happen, right? The next thing you want to look at is your expiration. Depending on the stock you select, some only you don't have a lot of options, a lot of room to work with. Like if you look at T Rowe, one of my favorite companies to do the wheel on. There's not much. They're usually like quarterly, right? So like I have to sometimes push them out quarterly, and that's fine. That's just part of my strategy. I collect the juicy premium, I let it sit, and I love that stock because it fits into our quad option strategy formula, right? Where I'm collecting dividends on those covered call premiums and that appreciation sale as well. So I'm totally fine doing like 60, 70, 80, 100 days expirations, right? As long as I'm collecting dividends through it. Usually I'm not going to do, on a growth stock, 100-day plus expiration, right? And there's strategies there with leaps and stuff like that. We'll get into that, right? But like for the most of you, I don't think you need to, it's necessarily worth it. Like I just don't, again, there's arguments to be had for everybody's strategy. I'm just telling you guys what I do, right? And then look at your expiration. For most, I would say 30, 45 days out is the greatest mixture of, obviously collecting that good premium on a monthly basis, or even sooner if there's big moves. You could close out your calls, your puts within, maybe a 2-week period. I've had times where it's like the next day there's some crazy news comes out and I can close it out. I take all that premium, or I just give back like $10 in that premium. Okay. So next thing I want to move on to, right? Now we have a setup, right? We know what our setup is. We looked at our watch list. We have a strategy. We have a plan. Stick to the plan. Now I want to talk about management of your covered calls, your cash secured puts. Some people will tell you to just let them go to the expiration date. They'll just tell you, let them go to the expiration date, and that's it. If you truly don't want to be involved at all, that is fine. That is fine. Me personally, I like to be involved a little bit because I really want to maximize the premium that I'm making. So for example, right, if I collected a premium of $100, right, from selling a call or selling a put, it doesn't matter in this example. And it's a 30-day expiration, right? 30-day expiration. And my collateral, I'll just write C, collateral for this, let's say we'll just use 10,000, just make this very easy, right? It's a collateral for 100 shares of this company. I got paid 100 premium, right? 100 premium. If something happens to the stock, right? Let's say we'll just use it. We'll just say that this is a covered call, right? And let's say this stock just tanks, it just plummets, right? Some bad news came out about it, right? And this is a covered call, right, that I opened up. It's going to start over time getting pretty much worthless, right? Because the stock is tanking and, nobody's going to want to exercise and buy it at a bigger price. Like what? Like why would I do that, right? They could just buy it for market value, right? So right here, what we can do now is, my screen turned off, guys. I was worried that I lost this audio recording because I think it's a recording on the audio. That would have been really upsetting. So yeah, like I was saying, right, as the stock is plummeting, right, your covered call contract, right, that's, say it's, a $200 stock, it's plummeting down to like 150 or whatever. Like nobody's going to want to buy that contract, right? So it's being worthless. So maybe in like 14 days, let's say 2 weeks, right? 2 weeks go by. This news came out, right, on the second week, and your covered call contract is basically worthless at this point. And they say, you know what? For $10 or let's say $20, right? You can close your contract out. So let's draw this out, right? I get to keep $80 of my premium, right? Because I'm minusing 20 to close it out, right? It took 14 days, right? instead of my 30-day expiration. Now it's like a 14-day expiration. And my collateral of 10K is returned to me. Now I can go, look, this is what I just did, right? Right here where I was selling my put, or in this case, I was selling a call, right? I fast forwarded time, right? Instead of waiting for expiration to see if I was assigned or not, I'm like right here and I jumped and I closed it real quick and I jumped to no. Real quick. So now my shares are given back to me and then I can open up more covered calls on those shares. Right? Now, with covered calls, it's a little bit different. Most of the time, I'll tell you with covered calls, just let them go to expiration because we want to sell them, right? We want to sell them, right? So usually with the cash secured puts, I rather get out because I can keep my collateral, right? So, sorry, I kind of misspoke there. Your collateral here was your 100 shares, all right? It was 100 shares of your company, right? But for the most part, if you collect around that 80 to 90% of your premium, just close it out. Just close it out. Like, especially if you have it's still like a 14 days still to your expiration, so much can happen there. And if you could free up your shares, you could free up your collateral. Like, again, I'm not saying all my covered calls, like I'm just letting them get to expiration. Like, I'll usually close them out. If I'm getting to 80-90% of my premium, I'll close them out real quick because, again, like I free up that collateral. I tossed a few bucks back and now I got my shares back to run covered calls, or I got my money back to continue, this full wheel strategy. And I just run this all day. It's as simple as that. Guys, I hope you enjoyed today's video. If you did, hit like, hit subscribe, join our free group. It's completely for free. That's where you can, ask questions, mastermind with everybody, share your wins, share your successes, share your questions, of course. And don't forget, drop a comment for your chance to win a free one-on-one option strategy call. We can jump on. We'll do a live little Zoom call together. You can ask me any questions. I can share the strategy more in depth with you guys. But that's it for today, guys. Remember, sell options, collect premium, repeat. I will see you tomorrow.